Welcome to Metals Investment Forum. I'm Chen Lin. Today I'm going to discuss the tapering of the Fed and the China situation. There's many questions about China, the slowdown. Are they heading? Where are they heading? Is there any trouble? So I'm trying to answer those two major questions here. Again, this is my disclaimer. I hope you read that carefully. Okay, so a lot of people ask me about gold, and then this is a chart of long-term gold chart, okay, in the past 20 years. You can see we have a big spike here along the 2008, and then spike all the way to 2011, and then came down, okay. And then we came up, another spike of last year, and then have little corrections. So, the question really is this corrections more like this, like 2010, or more like this, like 2013? So let's try to see some comparison. Okay, again, this is the S&P, and you can see it's just going parabolic. It's very hard to pick the top of the market. Again, I warn people, I know some people want to short the market. I don't short. I think, again, it can go whatever the way it is. The market is just manipulated. It's very low interest rate. People have nowhere to put the money. And if you compare right now, the big tech, versus GDP is even higher than 2000. So it's concerning, but it may go higher. So I don't want to pick the top of the market here. Okay, this is actually a better diagram. Okay, this is 20 years of gold versus the debt over GDP of United States. Okay, and then it's very long-term chart. Very long-term chart, you can see that it's very strong correlation of gold versus the debt over GDP of United States. It tracked very well. In 2000, this is around the 08 financial crisis, okay, and then gold shoot up. You can see that it can go really extended on the expectation that the debt to GDP will continue to go up. But as the gold reached the peak around 2011, it came down all the way to the debt to GDP level, which is consistent in the past 20 years. Okay, this is our current chart. You see that, again, on the expectation of more money printing, people think gold actually overshoot that debt to GDP, but not by much, not as much as 2011. And we just overshoot a little bit. So people ask me about what do you see the correction of this gold? How low can they drop? You can see that, it's possible. I mean, right now seems to be that if you think everything is constant, the fair value for gold is about 1800, which is about where gold it is right now. On a very hard correction, you can see that over here, we dip below, and then this is a great bear market of gold. We dip below, we can dip below that. Okay, so I would say 1600, 1500, it's a really big correction. It's possible. But right now, it seems like gold is happy where it is, okay? And it could go higher. Let's see the 2013 tapering. 2013, as people know, was a terrible year for gold. Gold started the year was 1700, which is just below where we are, and it ended the year at 1200. Okay, I put together all these major incidents happening. That's before the Fed announced the tapering, and then after the Fed announced tapering. You can see when gold dropped the most was when the Fed starts thinking about tapering. Okay, when they continued to discuss tapering, gold already almost dropped to the bottom. Okay, the gold almost hit 1200, and then on the tapering announcement of 2013, gold hit the bottom. It's not the bottom. It was a bottom. Okay, but because gold drop even lower in a few years, but that's for different reasons. But I'm just trying to review what happened in the last tapering in 2013. And then we try to reflect what we have now. So this is very similar. I see very similar timeline. Okay, and I see the tapering announcement probably will come in November or December. So actually very consistent with that, but gold didn't drop as much, okay? That's historically Fed. This is from UBS research, right? So the 2019 type, we have a stimulus, 2019 stimulus, and then start to drop, right? Stimulus start to drop. And as you notice, 2013, which we just discussed, right, is last when the tapering really coming off, actually the market coming back to normal, that was the bottom of gold. So, oops. Let's go back and then look at this coincidence, right? So we have a big stimulus last year for COVID, and the stimulus start taking away. It's not just US and Europe still in stimulus mode, but the rest of the world already taking off stimulus, right? So next year, it's going to be forecast to be the year of much less stimulus. The government around the world will take off the stimulus. It's kind of similar to the setup of 2010, 2011. Okay. So this is basic comparison. My trade. I'm a trader. I love gold, but when I see other opportunities, I don't hesitate to sell gold, and then in the hope of I can get back to gold at lower price in the future. So 2013, actually, I sold gold before 2013. I sold most of the gold and gold mine in 2012 because I don't see a very good value there. Remember, I went to a conference, people call me the Moses because I was supposed to lead the gold miner out of gold, out of Egypt. Anyway, people were not happy with me, but turned out to be a good call to get out of gold in 2012. 2012, the debt of GDP United States is about 2013, about 100%. Okay, stock market rally, and then there will hope, as the economy recover, that deficit will be reduced, the debt will be reduced, and inflation was low. And at that time, I'm more investing in energy and other commodities. I was waiting gold, hoping to catch a bottom of gold in the later time. 2011, actually, there's some similarities. I will discuss that in the last Metal Investment Forum in November. We were talking about potentially vaccine. Right. So when the vaccine news came out, remember Pfizer vaccine news came out over the weekend, 90%. I said, oh, Monday I came out newsletter. I said, sell gold. We need to sell some gold. We need to buy those cruise liner, hotels, movie theaters, and energy whatsoever. So it's a trade. Okay, I already out of it. I completed out of it, and we generate a lot of gains, profit, and now I'm looking for different sector to deploy, including gold juniors. So the next question I have is really the China slowdown. China is really, they have this social justice change, okay? I was talking that people like, this is Bernie Sanders, Elizabeth Warren on stereo, and they want to transfer, they actually do want to transfer the money from millionaire to little guy. Okay, in the name of social justice. They even consider the wealth tax that Elizabeth Warren was talking about in her campaign. There's a real estate tax that's almost certain going to happen. And they also, particular, they want to hit hard against speculation. So that's where the China case, and then that results in a slowdown in real estate. And I'll show you later on how hard it is. there are still many empty apartments in China. Even people were talking about that 5-10 years ago. It seems to gone away. It's still there. Okay, and during the COVID outbreak, the government sent police to knock on the door one by one. They found actually there's a lot of empty apartment in the big cities, and apartment price started to come down. So this is the bottom line. Okay, the COVID lockdown in China. Right now, there's another outbreak in the southern province of Fujian. And they try to lock down any outbreak, they will try to lock down. So the cost is very high. And Chinese economy has been boom for 20 years without recession. Okay, so the slowdown risk is pretty high. Recently, it's a big Chinese company, Evergrande, blow up, right? And they have a $500 billion RMB of debt, and they cannot pay more than $500 billion. So, and as I discussed in the Kitco interview, historically, dramatic reform in the wealth or distribution can lead to civil unrest. Even sometimes empire got toppled. Okay, and then also another trend in China is lower birth rate. Now China completely reversed the one-child policy, try to encourage birth, but it's getting too late, the population getting age. But in the short term, yeah, historically, this is a positive side. Chinese government always try to answer the slowdown with more infrastructure spending. So if there's a slowdown, there will be more infrastructure spending. And then Xi going to start his third term. I think he will get his third term next year, probably his last term. And he probably wished stability to start his third term next year. So that's a positive side. So the bottom line is we need to watch China very carefully, because China is number one steel manufacturer, number one aluminum, zinc, in terms of huge consumer of commodities, and they have a profound impact in the commodity market. So this is a China Evergrande. This screenshot is a little bit late. A couple of days ago, now even dropped even lower. You can see that it's $20 Hong Kong dollar stock last year and dropped to a little over 1/10. Okay, the market cap is 40 billion Hong Kong dollar, but it's much lower now. It's dropping every day, and you can see it's the huge volume recently because the company running out of trouble. They cannot pay the debt. They have more than $500 billion in RMB. That is one of the largest real estate developer in China. It's called like China's GE, for example. Okay, it's a big company. So that's running into a huge trouble, as you see. So I mean, just another example I'm trying to make is that China's impact on different commodities. China started to use the sodium to replace lithium in their lithium battery. Okay, there's abundance of the sodium on Earth. Okay, so they generally have a long recycle ratio. They have a very good low temperature, which means they run better in Alberta. Okay, and then they have very stable, but the energy density is low. It's about half of lithium, but the technology can improve. They can increase that. So the seems like a good replacement low-end lead acid battery may use in the low-end electrical cars. So, but may take some time to challenge the lithium. But that's something you need to watch it very carefully. If that really takes off, what impact to lithium, right? If that take off, what impact to lead, which actually is a key component for the lead acid battery, right? So so that's another thing. But they also will increase the demand of copper, nickel, and all the other battery material, because all the other material demand will increase because the popularity of battery will increase. Right? So you have to look at the different ways. That's another thing you want to watch. Okay, so let's briefly talk about the big picture. Federal Reserve balance sheet just going through. I mean, they start tapering. They may slow down a little bit, just like before, and then may come up again. I just don't think they can successfully reduce that. Now, gold has been in consolidation in the past year. As I discussed, it's more like early consolidation instead of the top of the gold. Silver, copper. Okay, copper is stable. This is the oil. It's quite stable. Silver actually is pretty low for the year. Okay, so every bull market of gold, usually a spike of silver. We haven't seen a spike of silver. That's another evidence. It seems to be we have more. We have more to go. This is only a consolidation. Platinum was hit very hard by the chip shortage of automobile. Okay, so you look at the rhodium. Rhodium, actually, this is a few days old. Rhodium, this is the ETF, so 1 to 10. So this means the 10,000 rhodium. Actually, right now it dropped below 10,000 rhodium. You can see that it was hit very hard by the chip shortage. A lot of automobile manufacturers, they closed their plant. So it will hit, so the rhodium price as well as palladium and platinum dropped very, very hard in the past few months. Okay, you look at US dollar, still range bound. So this is different investment ideas and amount of gold and silver. Okay, and so I also reduced the big company gold and silver producers. I'm waiting for the tapering announcement. Okay? So if for 2013 the tapering is the bottom this year, if it happened in November, December, that's a perfect because it's a tax loss selling season as well. Okay, so I think for juniors, it's still very, very exciting time. Yeah, $1,800 gold is very high price for gold producer. Major discovery, if you can have a cost below 1,000, it will pay off. So I'm very actively looking for investment idea for juniors. I don't see this as the big whoosh at 2013, and actually it could be an interesting consolidation process. And then, as I said, tax loss selling this year will be very severe and could be a very good opportunity, frankly. Okay, so this is just to talk about a little bit my philosophy of investment. There's just too many pump and dump in the junior market. So people say there's the smart money versus dumb money. So I'm the smart money, you're the dumb money. But I don't feel it this way. I feel I'm looking for value. I'm trying to avoid the zero-sum trade. Okay, it's like I win, I have to take a pocket from you. I don't like that. I like to see value got created. Okay, the old-fashioned way. You create value, everybody wins. Okay, so so basically, this is again, this is also my vision. Okay, so the key is you want to take a calculated risk. Okay, I not only calculate risk, I also have a better vision for the future. Okay, so I want to be the house, not the gambler. So if you want to gamble, you can go to Vegas. You don't need to come to the Meadows Investment Forum. Okay, the key is really you have more wins than losses. Nobody can win 100%. Okay, so and then over the long run, you can make good money. Okay, so this is what just a quick review what I have. The rally very hard. The COVID showed a new high 2020. So when silver was $12 and gold 15, was March of last year. I really pounded table. I really pounded table. I tell people to buy. I have a record to show that it's over one weekend. I remember that was a very, very low price. I take some profit, 1900, and cautious ahead of tapering, and also the picking the gold direction very important. Okay, so. In the long run, generally, gold miner will outperform gold. Okay, but you need to remember, gold miner are the core options of gold. Okay, so gold can go very violent, as you know, in the past few months. So since last November, I talked about the vaccine, and when the vaccine news came, I immediately sell gold and then buy the cyclical stock, cruise liner, hotel. Unfortunately, I didn't buy MC, but I bought the Cinemax. So, so on and so forth. And I already sold them for good profit. That trade already done. I'm more focused on gold now. Okay, so, and then finally, we have juniors. Juniors is exciting part. It's really stock pickers market. It even works in the bear market. Remember, there are a lot of winners in the last bear market. I happen to be part of it. And then you want to buy and hold and trade. Okay, you need to be active involved. Finally, this is if you want additional information, you go to chenpix.com. And I also partner with my good friend, Jay Taylor. I appear on his radio show very often. So that's my presentation. And then we come to the company I recommend here. I personally own all of them.